All right. Good morning, good afternoon, good evening to all our participants from around the world for today's webinar, exploring the impact of storage and hybridization on European solar asset management. Today we have with us two expert speakers, Susan and Marek. I'm Selina, the project manager at Solarplaza. And before I tell you more about our two speakers, I will give you a brief introduction about Solarplaza for those of you who are not familiar with us yet. And at the end of the webinar, we have a short Q&A session, and there we will make sure to answer all of your questions. First, to start with the Solarplaza introduction. So today's webinar is the first webinar for our flagship event, Asset Management Europe, in October. And this is the leading conference on financial and technical asset management in Europe. And as at the end of the webinar, we also have a small surprise for you. We have a 10% discount code for all webinar attendees, which will be valid for 1 week starting today. So stay tuned for the slide at the end of the webinar. And now about Solarplaza. Solarplaza is known for knowledge sharing and networking. We've been around since 2004, and last month actually we hit the milestone of 200 events organized around the world. With our events, our webinars, our newsletters, and other resources, we aim to accelerate the transition towards renewable energies. Solarplaza also has a consultancy branch. This could be interesting for you if you require any advice on your solar business. We also have a foundation with a couple of interesting projects to make sure that we accelerate the energy transition for everyone on the planet. Now, before I introduce the very first speaker of this webinar, a few practical notes. Yeah, as I mentioned, all your questions, we will try to answer them at the end of the webinar. For this, please use the question box on the right side of your screen. Also, if you encounter any technical issues, please use the same question box for this. I have my colleague Tom here on the side, and he will filter through your questions. Lastly, all presentation slides and the full recording will be shared with all webinar attendees, but please give us 1 to 2 days of time to share those with you. Yes, and then Susan, unfortunately we encountered some technical issues, and Susan is not able to share her camera, so we can only listen to her. Susan, could you say a word to make sure you're here with us?
Yes, I'm here.
Perfect. Okay, Susan is a senior research analyst with the Committee Insights team at S&P Global. She is conducting research on energy markets across Europe, the Middle East, and Africa. In her previous experience, she was working as an analyst at the European Association for Storage of Energy, and she has a doctorate degree from the ETH Zurich in the field of electrochemistry. Yeah, and now, Susan, we gave you the access to switch slides. Could you please check? Wonderful. Great. Okay, then I give the word to you.
Great, thanks, Selina. And thank you for that introduction. Yes, so I'm a senior analyst with S&P. I'm very happy to be here today to share some of our very interesting views on the energy storage market in Europe today. So today, Europe produces around 23% of its electricity from wind and solar generation. And in just 7 years, this will more than double to over 50% electricity to be produced from wind and solar in just 7 years. So we're already seeing right now a number of issues in the energy system with integrating these intermittent renewables. And this is mainly around a lack of flexibility in the energy system. Today, this is currently being filled by fossil fuels and filling those gaps when renewables cannot meet demand. But there's a real need for a clean, flexible solution to this. And this is where energy storage has a very important role to play. At S&P Global, we follow these markets very closely as part of our clean energy technology service. And this gives us a very holistic view of how the global energy storage market is evolving in line with other clean energy technologies like wind and solar. So today I will like to discuss the current storage landscape in Europe at the moment, particularly taking a look at how storage applications are evolving and what this means for operating and managing an energy storage asset going forward. There are a number of important drivers that have really transformed the storage market in Europe today, and this has mainly been a result of the energy crisis, which was a huge turning point. It created a real strong push for energy independence and energy security in Europe, and in order to achieve this, renewable build-out, so PV plus wind build-out, was really accelerated under the REPowerEU plan. This, in turn, has actually led to a number of growing issues in the energy system. For example, grid congestion. We're seeing this issue crop up more and more across a number of different countries in Europe. And we're also starting to see more instances of overgeneration from PV, particularly during the summer months, and this is leading to negative wholesale electricity prices. We've seen this quite recently. So all these drivers really combined have brought to the forefront this urgent need for a clean flexibility in the energy system in Europe. However, as we've already seen, 7 years is really not a long time before we really need to hit those climate targets for the EU by 2030. And we really need to see a market design for energy storage that evolves in line with the growing renewable deployment that's expected by 2030. There are a number of applications where energy storage can provide services to make money. And today, these applications for storage are typically focused on shorter duration frequency markets. And what you typically find is that there is, today at least, a trade-off between the market depth and the market value. So how much money can actually be made by participating in that market. And what we see is that more at the left-hand side here, so the short duration applications typically have a smaller market volume, but have a higher market value. So you can make more money by participating in those markets. Whereas if we look a bit further to the right-hand side, longer duration applications, there's a much larger market volume, but the revenue potential for energy storage is much less. This is mainly because these markets were traditionally established for fossil fuel assets, and they've really not evolved to favor low carbon technologies explicitly yet. So essentially, storage in those markets is still competing directly with your long-standing thermal assets. So there's really a need to start to open up these markets to favor technologies like storage that directly support renewable integration and provide a low carbon flexibility. Frequency response services today still form the core of the overall energy storage business case. So for those that aren't familiar with all these different acronyms, FCR is the frequency containment reserve, and AFRR is the automatic frequency restoration reserve. So basically, these are two ancillary services that batteries are very well suited to provide, and they just essentially keep the grid stable. FCR is a relatively shallow market, as we saw previously, shallow market but high value. We're already seeing, however, signs of saturation in this market, and in the long term, prices will likely fall. So this means that developers and battery operators will have to look for additional stable revenues, and it also means that new markets really need to open up for energy storage. This is already the case. We saw, it's still early days, but the launch of the Picasso platform for AFRR in 2022. This would allow essentially storage assets to also participate in this market under certain criteria. It's a much deeper market, so there's a larger opportunity for energy storage, but at the same time, there are longer duration requirements for storage assets to participate in this market. But at the end of the day, it would be an additional revenue stream for storage to add on to the SCR market. But what this means essentially is now we're at a place where there is a lot more operational complexity for a storage asset. So what this means is that the battery optimizer now needs to weigh up the pros and cons of the additional capex that would be required for a battery system to meet the criteria to operate in the AFR market versus the actual revenue potential, as well as other lifetime considerations of the battery system. On top of the complexity, on top of the complexity of operating in contracted markets, which provide more of a guaranteed revenue stream, there is also an opportunity for battery assets to participate in what we call merchant markets, so from wholesale arbitrage. And that's essentially the opportunity that this chart is showing here, is the evolution of day-ahead electricity prices from 2020 up to 2022. And we see very clearly there's a huge spike in 2022, which is a direct result of the gas prices in Europe. So this really pushed up wholesale electricity prices, and at the same time presented a very big opportunity for battery operators to make money. So it really meant that at the end of the day, a battery operating on the wholesale market alone could actually be profitable. But as we know, this was a result of a very unpredictable event, and we're already seeing today that gas prices are starting to decline. So it is not really a stable or long-term revenue stream, but it is still an opportunity that battery operators, of course, would want to capture. So if we're looking ahead now, with the massive build-out of renewables, particularly solar PV, expected in the next 7 years, a more predictable wholesale arbitrage opportunity could emerge. And that's what we see essentially in this chart. So on the y-axis is showing the ratio of the cumulative solar installations versus your peak load. So what this means is that any ratio greater than 100% means that you essentially have more PV generation than is actually required to meet peak demand. So you basically have excess electricity generation from PV. And what this chart shows is this, in fact, will become the case for several European countries around 2025, and even sooner for some countries like the Netherlands, for example, which has a very high installed PV capacity. The direct impacts of this are already being seen today. I'm sure we're all well aware of a lot of instances quite recently of negative wholesale electricity prices, due mainly because there's been an overproduction of PV generation during these summer months. So this has resulted in negative electricity prices, but what it also means is that during the evening times, of course, when the sun is not shining, this requires a huge ramp up from conventional generation to meet demand. So we essentially end up in a situation where we have, again, a daily price spread. But in this case, that price spread is much more predictable. So it essentially creates a more predictable wholesale arbitrage opportunity for energy storage. So just to recap, we've now seen a few of the current applications of storage today, which are typically focused on shorter duration frequency markets. But as I mentioned, since especially the SCR market is relatively shallow and likely to saturate, we also start to see new markets beginning to emerge, like the AFRR, and also new applications which will continue to evolve with the needs of a renewable energy system. So all in all, there's really a trend towards more complexity in applications, And this comes, of course, with its challenges, particularly for operating and managing a battery asset if we want to maximize revenue. The most important difference to operating a battery asset versus, say, a PV asset is the impact of cycling on the actual degradation of the battery material. So what I mean by cycling, the number of charges and discharges the battery asset carries out within a given year, for example. And the reason why this has such an impact is because degradation obviously directly linked to the battery lifetime. So there is often a trade-off between revenue potential. So the more markets the battery cycles in, obviously this impacts the battery lifetime and has an impact on system degradation, but the revenue potential could be higher. So it's really a trade-off between the two in some cases. It's a constant sort of decision-making process. So as operators really need to be able to jump between one market opportunity to the next in real time in some cases. And all this needs to be done within the safe operating limits of the battery system warranty itself. So to date, there is still a relatively limited track record of data to use for predictive analysis to really foresee which markets the battery should operate in. And this is especially the case since a lot of historic data is based on historic applications. And as we've already seen, this is a constantly evolving market with new applications and markets emerging. Also importantly, battery operators will also need to consider how the battery system operates alongside co-located assets like PV, for example. So it's very clear that there is a big challenge here to operate a battery system in such a dynamic and evolving landscape. And I'm sure Marek will go into more detail on this, but there is really a huge amount of value in companies that can provide software that operate batteries efficiently and also automate that decision-making process for the asset owner. As an investor, of course, all these complexities need to be taken into account, as well as other factors around country risk, the stage of the project, etc. And these all need to be accounted for when making the decision whether or not it's a lucrative battery investment for an investor. In general, though, as the industry continues to evolve, investors are becoming more comfortable with these risks, and especially with the added benefit of additional revenue stacking that we've seen from some of these potential emerging applications and markets. And of course, the emergence of more sophisticated asset management software that can really automate this process. We see a number of private investors specifically focused on energy storage assets. And as the industry continues to grow and the technology becomes more mainstream, the cost of finance will also decline. And we're already starting to see again a few more and more debt finance projects, which is a real indication of the investor confidence in the technology, and that is really here to stay and is a key part of the energy system. So all in all, the future for energy storage in Europe is bright. It has certainly been spurred on by the energy crisis and the knock-on effects of this, which it's had on energy policy in Europe, particularly accelerating wind and PV build-out, as well as, and quite importantly, recent electricity market design proposals showed a very strong support for storage in these policy proposals for the first time. Also, the fundamental need for more clean flexibility in the energy system becomes more and more clear in real time as we see more and more instances of negative prices and the growing grid congestion issues that we're seeing across a number of countries. So all these factors really combine to drive the positive outlook for storage in Europe, and we forecast over 120 gigawatts to be installed by 2030. And just before I hand over to Marek, I'd just like to summarize the key takeaways because we've shared a lot of information today. So firstly, storage is becoming a more mainstream technology in Europe, and investors are becoming more comfortable with the technology itself. The fundamental need for more flexibility in the system will inevitably grow in line with more wind and solar that's being deployed up to 2030. And the applications and revenue potential is continuously evolving within this landscape as well. But the biggest challenge is how to operate a battery system to prolong its lifetime and maximize its revenue potential. And all of this in line with supporting the integration of renewables in the energy system. And with that, I will hand over to you, Marek.
Yes, thank you, Susan, for this very insightful presentation. Indeed, a reminder for the audience, if you have any questions for Susan or for the next presentation from Marek, please use the question box on the right side of your screen. And yeah, now I would like to go ahead and introduce our second speaker. Marek, you can already turn your camera on. Marek is a founding member and managing director of energy storage technology company Fluence. He's the leader of Fluence UK, Ireland, and Israel team, and with over a decade of experience in clean tech. He also played an instrumental role in developing Europe's first grid-scale commercial battery storage project back in 2015. Welcome, Marek, to today's webinar.
Yeah, thank you very much. Good to be here with everyone. Would you like me to kick straight off, or I know we had the poll question, so.
Exactly. Let's pull up the question for our audience. So we have this question: should solar and storage co-location be mandatory? You have 3 options to choose from. Yes, for maximum solar yield for bulk energy shifting. Yes, for providing grid stability services more economically. Or no, storage is most valuable standalone and where needed most. It's a bit of a trick question, I would say. Curious what the answers will be. We will give you a few minutes to think about it. We see the first results. I see 40% so far voted for the second option. Yes, for providing grid stability services more economically. And the least people chose yes for maximizing solar yields for bulk energy shifting. Interesting. Yeah, with this, I would like to give the word to Marek.
Yeah, thank you very much, Selina. Okay, so yep, good morning, good afternoon, and good evening, depending where you're tuning in from around the world. I thought the poll would be an interesting way to check if you're, you know, all still paying attention. It's an interesting one because I don't think there's really a single right answer, as we'll get into, and I think that's perhaps reflected by the fact that we had a you know, distribution spread of answers. So before I go into things, just to introduce Fluence a little bit. I am, oh, sorry, I'm just checking I've got my slide control. I think I do. Maybe I pressed a little bit too enthusiastically and jumped forward too. So yeah, to introduce Fluence very briefly, we're an energy storage technology company. We're mission driven, been around since 2018, but through our predecessors companies for about 15 years involved in energy storage. So we provide energy storage technology, it's battery-based storage technology. We have about 6.6 gigawatts. So essentially we're a market leader in what we're doing here, providing energy storage to help enable the renewable transition. But we're also a leader in cloud-based software, so providing the intelligent software and controls that Susan was talking about in the earlier presentation. So that's both optimization services, so providing essentially dispatch into different markets for any types of renewables or storage, or on the case of the right-hand side, particularly asset performance management software, which we call Nispera. So across those, we have about 21 gigawatts of assets under management of all different types. And essentially, as I think this is an audience predominantly of asset managers and predominantly interested in the intersection between storage and solar, that this might be an interesting couple of topics to focus on today. So I'm going to talk about two things. One is a little bit about the technology, the design assumptions that go into it, and then the second is around using the data that we get from these projects in making sure that we make best use of them and essentially help enable this renewable energy transition to happen faster. So I don't need to dwell too much on this, I think, because Susan talked about the use cases for energy storage in her presentation earlier. But if we look and drill into solar and storage specifically, this gets into the question that we had in the poll, right? There are various things you can do with co-locating or hybridizing solar and storage. You can have the storage on site, but really independent, just taking synergies of whether it's financing, balance of plant, the grid connection, the grid costs, and have really the batteries doing something quite different to the solar. Or they can be very closely intertwined and actually using the batteries to store and ensure maximum production and solar yield from the battery project, from the solar project using the batteries. There's no single right answer for these. In Europe, we're mostly seeing essentially the batteries being used for these sort of grid services that were talked about earlier, AFFR, FCR, and so on. Whereas in the United States, we've seen a lot more of the co-location of solar and storage actually be about bulk energy shifting. But there's a few reasons why that would be the case. So what goes into thinking about the technology side of things when you're planning an energy storage project? Well, fundamentally, the business case is going to be the real driver. The reason we've seen a lot of these sort of bulk energy shifting applications in the US market in particular, historically have been because of the production, the tax credit essentially that was available in the United States, that was only available if you could prove that the batteries you had on site were charging from the solar project. And that creates a strong business case, a strong incentive to maximize solar yield and essentially have a reduction on the capex cost of the solar project by putting it in. Whereas in Europe, as I mentioned, mostly it's driven by grid services, and those could be located anywhere, but there are certain advantages in developing solar projects and essentially permitting batteries alongside. So if you come from more of a solar background on this, I guess one of the key things to really highlight is batteries are much more complex pieces of technology than the solar projects are. So the idea of a sort of self-integration approach of buying batteries from one party, inverters from another, controls from a third party, is where you can get into a lot of challenges in making sure that the system operates in a functional way. And I'll get into that a little bit by talking about AC and DC coupling. But if you think about it, there are already a lot of trade-offs that you have to think about in terms of if you're putting a battery on the same site as your solar. For instance, do you have a grid connection that you're going to share for the solar and the battery, or do you have two separate ones? If you have two separate ones, they're really two distinct projects, and it's not really maybe solely solar and storage. It's as a combined entity, it's really two projects on one location. It's not necessarily wrong. I mean, there are still synergies that you can get from permitting. The batteries are not very large in terms of footprint compared to the solar project. There might be synergies in terms of installation. So technology providers like Fluence prefer to deliver essentially the product, but not do any of the civil works, the installation works, the electrical balance of plant. And often the solar contractor is very capable of doing that. And so there can be synergies of doing that rather than getting two separate parties to do those two separate scopes of work. But probably where this all comes together in terms of design assumptions is really deciding what is the business case and then how best you suit those needs. And specifically to that, AC versus DC coupling of storage is probably the key initial decision you need to make, because that affects a lot of these other design assumptions. So I'm going to take a moment to explain a little bit about what I mean by that if you're not familiar with AC coupled versus DC coupled batteries. So simple illustration, a typical solar project, if you forget about energy storage, hopefully this is familiar to many people, you would install a certain amount of solar panels on your site, and you would typically have a number of inverters exporting that power to the grid that is a smaller amount than that solar. Simply put, because if you put in this case, for instance, 130 megawatts of inverters, they would be underutilized a lot of the time. Any energy that you have in your panels that cannot be exported is essentially wasted energy. And there's a sort of economic maximum minimum. You can play around with this, but generally an AC to DC ratio of 1.3 makes sense. If you were to increase that, let's say you put in more solar panels with the same amount of inverters, you end up with a lot more clipped energy, clipped solar, and you do only get an additional shoulder bit of energy on either side. But this is where DC coupling of storage can make a lot of sense if you look at bulk energy shifting. So if, for instance, you install a battery, you can then have it behind that inverter and then store the excess clipped energy when it can't be exported to the grid and use it later on. So then you end up actually with a much higher DC to AC ratio of panels, so you can maximize your solar yield, but still end up only with about the same amount of clipped energy as you would have had before. And whether that makes sense depends really on the market, the business case, like is this extra energy shifting from day to evening valuable or not? And that's very market specific and market dependent. To illustrate that technically in a very, very simple way, there are benefits as well to doing DC coupled storage from a balance of plant perspective. So rather than needing a separate inverter for the batteries and a separate inverters for a solar, which is what you'd be doing really if you had two independent assets, you end up instead essentially for a DC coupled system only needing to buy one set of inverters. So you save on buying extra two sets of inverters, two sets of transformers, two sets of switchgear. But on the other hand, it does come with some trade-offs, right? You have to also procure what are called DC to DC converters, and that's because the voltage from the solar project changes throughout the day, and the batteries therefore need an ability to adjust their voltage to match the solar because they're all connected to the same bus bar on the inverter. So you can see how these projects start to get more complex when you make them more intricately interrelated. And that's doubly so for the software and controls, because you can get complicated feedback loops on grounding, on control. If the voltages aren't matching, you basically end up with a system that keeps tripping out all the time. So these are definitely not as straightforward, particularly if you're looking at a self-integration route as opposed to buying a complete technology solution from someone like Fluence. So that's some of the technology and design considerations. The other side of this coin is, what do you do with all this data? How do you make sure that your solar or your hybrid solar and storage assets make the best use of what you've installed and return on investment? This is also becoming increasingly challenging, because if you look at essentially the amount of data, raw data coming from the technology, historically thermal power plants for a gigawatt facility, you might have 10,000 individual data points coming out from the turbines, from different heaters, coolers, boilers, things like that. As you sort of step through the technology classes, solar is already 50 times more complex, because you have a lot more readings, a lot more data points, particularly if you have string inverters. You have many string inverter data points. You have data points perhaps on each of the panels. So this data is becoming more complex, and storage takes that up another level, right? A single gigawatt size facility would have 1 million data points potentially every 2 seconds. So that's a huge amount of data. It's an absolute tsunami of information, which you can either ignore or you can do something with. And if you multiply it up with the sort of projections Susan was talking about to 2030, well, we're going to need a lot more solar, a lot more storage, a lot more wind, all these technologies. So there's going to be a huge amount of this data, and making good use of it is becoming increasingly important and a competitive edge. So how does this work in practice? Well, if you're an asset manager on this call, perhaps you'd be better to tell me, but the large part of this actually is the challenge of, if you're looking at a portfolio of projects, say different energy storage technology from different suppliers, perhaps different chemistries in different locations, some hybrid, some standalone hydro, some standalone wind, some standalone storage, all these different technologies from different OEMs mean you spend a lot of time having to actually focus on data collection, like pulling all this information from different sources that isn't harmonized in one place before you can actually analyze it, share it with important stakeholders, for reports, budget, is the asset meeting the revenue expectations that were set out, and if not, why not? And actually not very much time, actioning that data and doing something useful for it. So the power of essentially cloud-based technology, and I'm going to use the dreaded words, they're real buzzwords these days, I suppose, but AI, artificial intelligence, machine learning, is being able to harmonize a lot of that hard manual work and take the data collection and analysis and sharing stage into a platform that can do it far faster and far more efficiently. And as a result of that, you can spend a lot more time actually using that data and actioning it, right? So there's a lot of different things you can do to probe and analyze this data more effectively and make better decisions that can either reduce downtime or can some way improve the performance of your asset, whether that's a battery, whether it's solar or some other platform. So another way to illustrate this, the slide advances, is thinking about this from a company perspective. So different assets from different suppliers might be actually maintained and the data analyzed by different asset managers in your company. And if that's the case, you end up with quite a challenging mess of how do you actually compare and benchmark how all these assets are performing if it's not in one place and not analyzed by a single party. So this is where essentially the kind of cloud-based data technology that we're offering is able to help. It essentially streamlines all of these things and puts them into a single platform that goes beyond actually just monitoring it, but actually provides some of those actionable insights ahead of time. So what you see on the screen here is from the Nispera platform, and it's visualizing a solar asset. And what you can see is essentially a digital twin of the solar array in sort of map view. The green is essentially an indicator of panels that are performing at their expected level based on their characteristics. You plug in all the data about performance and so on, and you can see that there are certain sections of the solar field that are not performing the way they should. And being able to visualize this data and make it actionable immediately, you can see, for instance, there's a few red patches in there, so strings that are not operational at all and perhaps are down. That makes it very quick and straightforward to get an O&M provider out there to fix those particular panels that aren't working and to investigate, for instance, what's happening with the yellow panels, like other trackers, for instance, stuck. Finding out those things faster is very valuable because essentially time is money in terms of these assets. So hopefully that ends up meaning you have a happy set of asset managers essentially that you're able to collect, analyze, and optimize this data in a more effective way overall. So I'm going to stop there as well so that we have some time for questions, but that's essentially the data side of things. And what we have seen with Nispera, those that of our customers who are taking this, is typically 3 to 10% higher revenue from whatever asset that is, and that's agnostic as to OEM. It's not for just say Fluence batteries, it's any energy storage from any provider, and the same from all the different renewable asset classes. So if you're interested in learning more on that, happy to take questions now, or there's a link at the bottom there for inquiries. Thank you very much.
Yeah, many thanks, Marek, for this presentation. Very interesting. And now we would like to give the audience the chance to ask their questions. Indeed, we got a couple of questions already. Susan, we also welcome you back. Are you with us? Can you make a sign?
Yes, I'm here.
Perfect. Okay, the first question is for you, Susan. Why do you forecast that Italy and Spain will have the same front-of-the-meter battery deployment by 2030, given the battery returns in Spain aren't as attractive at the moment? So maybe quickly repeat, why do you forecast that Italy and Spain will have the same front-of-the-meter battery deployment by 2030, given that battery returns in Spain aren't as attractive at the moment?
Yeah, I think Spain has a huge potential. We see, at least within our forecast, that we see the potential in Spain, especially towards the end of the decade. We see that this market, the capacity market, opening up in Spain. So this would essentially be where we've placed a lot of the emphasis on that forecast for Spain. And we know that in Italy as well, that the capacity market has already proven to be successful for storage. And I think within that forecast as well, we expect, a lot of there's been a lot of policy announcements supporting storage at the moment, and particularly driving storage uptake and low carbon technologies, flexibility in capacity market. So we do expect, Spain, there's been a lot of talk of that capacity market. We expect that to open up, and we expect that opportunity to grow towards the end of the decade within that forecast.
Okay, and the next question for you, Susan, as well. On the slide, one user, Edwin, asked the question, Edwin de Krij. On the slide from Susan on the European growth, why is there a dip in 2024? Is it all power capacity or energy capacity, by the way?
Yeah, I think so. That forecast was in megawatts, and then the dip. I think the dip in, is it 2024 or was it 2025? I think there's a peak. It's more that peak is coming from all those capacity market projects in Italy coming online, and then after that we see a slight dip. So that's what's pushed up that peak mid-decade.
Okay, I see people are asking already for contact details from the Fluence office. That's exciting that all the information is in the slides as well. One question, what is the number of cycles such as battery storage system can do? Cycles, this is perhaps for Marek. Can you answer this question?
I think so, yeah. It's, well, the answer is it depends, of course. So first of all, the duration of the asset, what's called the C rate, which is sort of essentially a power to energy ratio measure. So the longer the duration of the system, if you have a 4-hour battery, for instance, the cycling of that system can last potentially a lot longer than a 1-hour system would. So the C rate is one of the key parameters that it depends on. And then how you're actually dispatching those cycles. So cycles in itself is not a necessarily helpful thing to describe, because a frequency regulation cycle, like Susan was talking about for AFR and FCR, is much less, should we say, degrading on the battery than a deep power cycle of charging all the way up and discharging all the way down. So it really does depend quite a lot on the use case. Typically, a 4-hour asset at a cycle a day can maybe last for about 20 years operationally, whereas a 1-hour asset that was doing 2 cycles a day might only last, 5 years or 6 years. So there's a really large range in terms of the total lifetime of the asset before you need to augment or repower the system with new cells. So, I mean, that doesn't mean that the battery asset ends its life at that point. We offer, essentially repowering services, recycling services as well. The assets themselves can potentially last, 30+ years, right? Things like the transformers and power infrastructure are built for much longer than necessarily the cells.
Okay, thank you, Marek. Very well answered. Another question for you coming from Arturo. How is the digital twin being used? Is it just a digital representation of the solar storage, or is it doing some predictions as well?
It's a good question. So a bit of both. So there are predictive analytics built in as well to the Nispera platform. I mean, use a slightly different example of this is a wind turbine, because I talk mostly about solar here, but for instance, by analyzing all of, and this is the point, right? There's actually a lot of data out there already. You can say, and Susan mentioned, right, storage is not as long, but we have assets as long as 15 years that have been involved in energy storage and operations and have a very large global fleet. So there's a lot of data there that you can use to derive insights from. And if you take the example, say, of a wind turbine, you can predict essentially ahead of time if you start seeing certain patterns of behavior that turbine is going to fail in a certain amount of time. So rather than waiting for it to fail and then fixing it, which is very expensive, essentially some of this predictive maintenance technology using machine learning can allow you to identify the issue and actually potentially fix or replace a part before the whole thing fails. And the same principle can apply to the solar, to batteries and other asset classes.
Okay. Thank you, Marek. And then I have one more question for Susan. Susan, could you elaborate about the type of flow batteries you're familiar with in the market, and what is your forecast about those batteries? That's a question coming from Davina.
Yeah, I mean, we also, within our forecast, we do include alternative technologies, which obviously include flow batteries. There are a number of different flow batteries from vanadium, zinc, iron flow. Within our forecast, I think we see that this has more potential towards the end of the decade. As I showed, the applications evolving with time, with more wind and solar, towards more longer duration applications. And I think that's where these alternative technologies have a more of a competitive edge. At least it's very difficult to compete today with lithium ion, particularly on cost for these types of technologies.
Okay. Then we take one more question from Arthur. Maybe we can fit 2 more questions looking at the time. For Marek, how important is the data in the performance of asset management software? For example, how quickly does the software improve as it has access to more data? And then where do you see the APM software being most useful?
Yeah, I mean, that's a great question. I would answer yes. Certainly, it's not linear. It is actually exponential, which is the really exciting thing about it. The easiest way to answer that is just look at. I mean, AI. I said AI is a real buzzword at the moment. The advancement of something like ChatGPT, it's pretty exponential, right? In a very short space of time, we've gone from AI being a buzzword to actually being very useful for a lot of different things. So I think it's hard to actually predict how powerful that sort of transition is, but the data is growing exponentially, and as the data grows exponentially, the insights that you can derive from that are also not going to grow linearly. The system will get smarter and smarter. So each day, I mean, week, we're finding out new things that are useful, or building new insights, new information from this data platform. So the short answer is, I think yes, it's very powerful, and it's not going to grow at a linear pace. It's growing at an exponential pace.
Good. Yeah, then to round up, one final question coming from Mathieu Pauls. How do you expect the market to move in Europe collection? No interaction between PV and storage, but same network connection, hybridization, or standalone storage project. How do you expect the market to move?
I think we can both answer that one. So maybe I can go first, and then Susan can add in. So it's going to depend on the market. If you look right across, I don't know if it was Europe or Europe, Middle East, Africa, but in some places we're seeing quite straightforward use cases. Like in Israel, for instance, there is a mandatory requirement for every megawatt of solar that's installed, there's 4 hours of battery with it. So there's a very clear business case that's built around time shifting there, because it's believed to be the best way of making use of limited land, limited grid. In the UK, we haven't really seen much solar and storage co-location, largely because the drivers aren't there for that same type of use case. It's mostly been about ancillary services. And doing those sort of grid services, system services, you can do that standalone. There are some benefits of doing it co-located, but there can also be drawbacks. If you're sharing a grid connection for the solar and the battery, you might not always be able to do those grid services. And if those are your most valuable revenue stream, do you really want to curtail your ability to do that at any time at the expense of your solar asset? So yeah, that at a high level, it's going to depend on the market. There are some markets that are more exciting for hybridization, some that are more exciting for energy shifting, some are more exciting for standalone. Susan, do you want to add anything to that?
Yeah, I completely agree with what you said, but also I think interesting is the C&I segment. I think that there's definitely potential here for having your storage asset co-located with your PV, and I'd already touched on this negative electricity prices, and it's really also that distributed generation behind the meter which is contributing to those negative electricity prices. So co-location behind the meter at large C&I sites, I think, will also have a huge role to play in the flexibility in the system and in terms of co-location, storage plus your PV.
All right, perfect. Many thanks for answering these questions. Marek, Susan, we will also send those questions for you afterwards, so you can connect with the audience. Both Marek and Susan will also be at our conference in November, and as promised here, we also give you a 10% discount code, as mentioned, valid for 1 week starting now. So I'm looking forward to meeting all of you at our conference in Frankfurt. Yeah, this is just the banner and the final slide. Many thanks, Susan. Many thanks, Marek.
Thank you.
Thank you.